Good afternoon, ladies and gentlemen. Welcome to our special last 1 hour coverage of the right action that there is across equity markets. This is Shail Bhatnagar, your host, and it's not looking good for Dalal Street. You have a massive sell-off. Is it profit booking? Is it short positioning? Or is it just basket selling? Only time will tell. But you have the Nifty down 2.1%. This is the biggest fall since August 5th, when the index fell about 2.6%, down 550 points on the Nifty, 25,250 for you. Remember, the 21-day EMA is broken, and now the Nifty is headed for the 50 EMA, which is at 25,050. Still 200 points to go. Whether the markets will reverse or not, only time will tell. You have the Nifty Bank 1150 points lower at 51,770. The Nifty 500 is worse off than the Nifty, which basically shows that the sell-off is widespread. 521 points lower at 23,751. And amongst the IT indices, we track 19 for you. All 19 of them are in the red. The maximum losses are in indices which were rising the most, mainly on because of hopes of an interest rate cut. Therefore, the realty index down 4.2%, the Nifty auto index down 2.8%, and of course mid caps and small caps have also taken it on the chin, down 2% each. The reasons are two. One of them, of course, is the problem in the Middle East. Rising tensions between Israel and Iran, which is the fourth largest producer of oil, are the reasons why you see this very sharp sell-off that is happening in India. Yesterday was a holiday in Indian markets on account of Gandhi Jayanti, and Tuesday, after markets shut, there was this missile barrage by Iran over Israel. About 180 ballistic missiles were fired. That has resulted in a sell-off in global equities across the world and a rise in global crude oil prices, because Middle East is the biggest producer of crude oil, something that India imports, something that it was enjoying a large dip in crude prices. But two or three things have happened which are negative. One is this flare up in the Middle East. Two is the SEBI circular that has come to curb speculation in futures and options. That has also hit market sentiment, and of course this has all resulted in a very, very sharp sell-off. It's extremely visible when you look at the volume that is in the top three most active traded counters, which is Reliance Industries down 3.7%, 3,791 crores worth of sales have happened. HDFC Bank 2.7% down, 3,050 crores, and of course Tata Motors down 3.8%. 1,800 crores worth of transactions are seen. Other index heavyweights such as ICICI Bank, L&T and Axis Bank have also lost ground very sharply on very, very heavy volumes. So this is a basket selling which is done by institutional clients. Are they foreign or are they domestic? Only time will tell, but most likely they are foreign. Yesterday's sale number, which is Tuesday's sale number, net sale by FIs was 5,500 crores. Monday's net sale was somewhere like 9,900 crores, and today's number is most likely to top all of that. Let's get hold of Mr. Nilesh Jain. He's joined us, head vice president for technicals and derivatives research at Centrum Broking. Namaste, Nilesh ji. क्या लगता है आपको बाजार में इस तरीके की ज़बरदस्त सेलिंग भयंकर रूप से प्रकट होती हुई और सेंटिमेंट बिल्कुल टूटा हुआ बाजार में, चौथे दिन लगातार गिरावट, क्या लगता है क्या इस गिरते हुए छिरे को खरीदें या दूर रहें?
Very good afternoon, you, Shalin sir. देखिए, इनफैक्ट इफ यू लुक एट पास्ट 3 एक्सपायरीज जिसकी शुरुआत इसी प्रकार की हुई थी, स्टार्टिंग विद जून, जहाँ पे एक बड़ा डिप हमें देखने को मिला था टूवर्ड्स द लेवल्स ऑफ 21,500, और उसके बाद जुलाई के मंथ को छोड़े तो अगस्त एंड सितंबर दोनों ही सीरीज की शुरुआत हुबहू इसी प्रकार के फॉल के साथ हुई थी. So that clearly shows that the immediate trend is on a negative side, but ग्रेजुअली वी माइट सी अ रिकवरी। अब यहाँ से निफ्टी अप्रोच कर रहा है अपने 50 डे मूविंग एवरेज को टेस्ट करने के लिए। आई थिंक कि 50 डे मूविंग एवरेज जो 25,000 है उसके नीचे शायद निफ्टी ना फिसले और वहीं से हमें एक रिबाउंड देखने को मिले, बट फ्रॉम करंट लेवल वी स्टिल हैव 250 पॉइंट रूम लेफ्ट। जो निफ्टी हो सकता है यहाँ से 250 पॉइंट और गिर के अपने 50 डीएमए को टेस्ट करे। 25,000 is a strike where we have seen huge amount of put writing. Put writers अभी भी काफी एक्टिव है 25,000 पे। नाउ आज के सेशन में एक डेवलपमेंट हुआ है कि 25,500 पे कॉल राइटर्स हैव स्टार्टेड बिल्डिंग देयर पोजीशन, सो ह्यूज कॉल राइटिंग हैव आल्सो स्टार्टेड witnessing at 25,500 strike. Another pain point is the India Week's volatility index जहाँ पे 13-14% का उछाल हमें आज देखने को मिल रहा है. So that clearly shows that there is a kind of a panic kind of situation and markets are going to remain volatile. बैंक निफ्टी अगेन यहाँ पे एक अंडर परफॉर्मेंस कंपेरेटिवली थोड़ा हमें देखने को मिल रहा है. 52,000 का साइकोलॉजिकल सपोर्ट है वो ब्रीच हो चुका है. सो नाउ द नेक्स्ट लेवल इन द बैंक निफ्टी टू वॉच आउट वुड बी 51,000. So another 700 point kind of room left for bank nifty. So what we are advising to wait for another day or two to let the market settle down, and we might see a reversal candle that can be bought.
Okay, but for the moment, ladies and gentlemen, just chew over these figures. I'll request the PCR to fire the long-term chart of the Nifty. 4 days ago, we were at a record high, which was 26,270. Today, the market is at 25,250. We have shaved 1,000 points in a span of 3 trading sessions. Remember, yesterday was a holiday. Look at the Bank Nifty. Again, 4 days ago, a record high of 54,470. Now at 51,740. That's a sharp fall of 2,700 points. Now, this is what is worrisome, ladies and gentlemen, the trajectory of the fall. You normally have a sideways to flat correction, but you've seen a very sharp sell-off, and the problem is that this time it is led by Reliance Industries. When was the last time people saw Reliance Industries below 200-day DMA? It's a rare occurrence. I'll tell you when Reliance was below 200 DMA, and this was somewhere in 9th of November 2023, October 2023. So we are somehow 1 year away from the same time, and the sell-off in Reliance has resulted in the counter being at June 5th lows. June 5th is really important, ladies and gentlemen. That was the day when the market reacted to adverse election outcome. So the market is trying to tell you something, and that is that extreme overvaluations, extreme froth, and of course this mad frenzy to buy anything that moves on the long side is the reason for this very sharp uptick in valuation, which invited bears to Dalal Street. Nilesh ji, at this point of time, what are you doing? Planning a holiday, or are you looking at some interesting stocks which you would want to add to your long-term portfolio? How about Reliance below 200 DMA? What are your thoughts?
Well, very good point that you have highlighted. After a span of 1 year, for the first time, Reliance slipped below its 200-day moving average, and that too on a gap down note. So, a kind of a double confirmation of a structural disruption in this particular stock. And even if you see the volume today, it is quite high on a high side. If you see derivative data, 11% OI addition can also be seen. So multiple factors that are showing that this structural breakdown is likely to go further down, and Reliance may touch the levels of 2750 to 2720 on the lower side. So better to wait for another trading session. And as I mentioned that I need a reversal candle, this kind of a structure which is indicating that we might see a further downtrend to continue in this particular stock, and that is again a negative for the market because index heavyweight which is showing a structural breakdown is not a good sign. So in Reliance, I would wait for a dip towards 2800 to 2750. That could be a good range to accumulate this particular stock. But for the time being, along with that, another stock that just want to highlight, which is another heavyweight, that is HDFC Bank. So here as well, if you see the stock has broken its 21-day moving average and it is inching towards its 50 DMA. So we expect another 2 to 3% kind of dip in HDFC Bank as well. So these are the index heavyweight counters which are showing weakness. So on the back of that, we expect both Nifty and Bank Nifty to witness another day of selling going forward.
Okay, so this is the view that is coming into both Reliance Industries and HDFC Bank. Remember, ladies and gentlemen, it is not the right strategy to catch a falling knife, especially when the speed of the fall is increasing dramatically. So do nothing, just stay on the sidelines if you are not an active trader, and God forbid you try and catch this falling index, which is now sort of attracting a lot of selling pressure. Look at the advanced decline ratio on the broader markets. At the moment, only 380 stocks are in the green, compared with 1945 in the red. So 1945 divided by 380, that's the advanced decline ratio, 5:1, which means that for every one share that is in the red, in the green, there are 5 that are falling down. But this is also a good time to look at stocks which are making record highs, because that will give you an idea as to where the money is moving in times that are desperate. So Bombay Stock Exchange, and what a lovely surprise that Bombay Stock Exchange threw for its shareholders and of course long side traders. The new SEBI circular, which is loaded against rising volumes, which is loaded to curb speculation, which is loaded to prevent underinformed retailers to try their luck in the F&O market, has been proved a boon in disguise for Bombay Stock Exchange at a time when it is competing with the National Stock Exchange to get some volume. Remember, National Stock Exchange is unlisted but controls nearly 95% of daily traded volumes on the option side. So that's a place where some analysts feel that the Bombay Stock Exchange will now get more volume and relatively more volume, and of course more market share away from its larger rival. That's why you see it making a record high. It's rock solid. It's not lost much. Remember, the intraday high was 4,100 something, now at 3,996. Nilesh ji, what are the charts of BSE telling you?
Shalin sir, as you have rightly pointed out, now after this development yesterday, I think it's a level playing field for BSE as well. So certainly we might see a positive action to continue. BSE structure looks strong, and today it hit a new record high of 4,200. Although we have witnessed some profit booking from the high levels, but the major structure looks positive. It looks like it has given a kind of flag and pole pattern breakout as well. So any dip towards 3,900, 3,800 could be a good entry point. One can keep a stop loss below 3,600, and on the upside, positional target for this particular counter comes around 4,300 to 4,400. And it's not advisable to chase at the high level. Better to buy in a staggered manner, but keep a stick stop loss below 3,600.
Okay. This was not an invitation or how should I say, an advice to buy, but I'm just trying to say that when all hell is breaking loose, what is of extreme interest is to look at stocks which are rising smartly, and of course if they're hitting a record high, that is something that you need to at least track. Similarly, Deepak Fertilizers 1136, record high, 2.31% higher. Steel is doing extremely well, a record high on Jindal Steel and Power, JSW Steel, both of them now firmly above 1,000 rupees, including moves on Hindalco. So metals are doing in a fine shape, and the other stocks that have hit record highs are Britannia, 6,314, down 2%, but remember early morning it did hit a high. And of course you have Vijaya Diagnostics, 2.8% higher, 980. So that's the theme that is running broadly. And amongst top gainers are a couple of stocks. Petronet LNG, 5.5% higher, 363. Nileshji, would you just take a look at what Petronet LNG is trying to do?
We have witnessed a good rebound in this particular stock as well from the lower levels. If you see the volumes today, it is above average volume, and a huge amount of short covering can also be seen today. So overall, we expect a follow-up move to continue, but after a spurt of 6%, is not advisable to chase. But if somebody is already holding the long position, can stay put, keeping a stop loss below 348, and we might see a follow-up move to continue towards 370 to 375.
Okay. 2:48, ladies and gentlemen. We are now in the last 45-minute wheel of the market today. Of course, carnage all around, selling pressure at its peak, basket selling in a lot of index heavyweights has put Nifty bulls on the back foot. Nilesh, how much of this selling do you think is because of the problems that we are facing on the Middle East, and how much because of the SEBI circular on curbing F&O trade?
See, Shalin sir, if you just see yesterday, the Dow was trading on a positive note above 42,000. So in the US market, we have seen some kind of a positive move. But today, specifically in the Indian equity market, I would say 60 to 70% is more sort of because of the SEBI circular, and maybe 30 to 40% kind of fall that has attributed because of the Middle East tension. So although both have some part to play, but major move, major pain was seen because of the SEBI circular.
But why is it, Nilesh, that despite the circular, Bombay Stock Exchange and Angel One are up?
So see, as I mentioned earlier, so for BSE, it's a kind of a positive news. So for NSE, there are 3-4 expiries, Fin Nifty, Bank Nifty, Nifty now, they have a limitations to keep only one expiry in a week. Whereas BankX, they are already having 1 or 2 expiry only. So it's kind of a level playing field for BSE now, and it will have some kind of advantage in terms of volume generation, and some decline in the volume might be seen in the NSE as well. Now, this is a positive sign for some broking stocks that we have seen, although it's not a major positive, but some kind of positive action we are witnessing because of that. But purely, it's a beneficiary that's a BSE that might get some advantage because of that.
Okay. Now also remember, ladies and gentlemen, that rising Middle East tensions have resulted in a mild spike in crude oil futures, which are now sort of trading at, just a moment, let me just get you the dollar value. What I have is, okay, crude oil futures over the last 3 sessions have risen from $66 a barrel to $72 a barrel, now about 71. Although they are up for 3 successive sessions, at the current moment you see crude oil futures around March 2023 lows. So this is the thing that is bothering analysts, that this time period of weaker crude oil prices may have ended, which is also one of the reasons why the rally is now getting sold into India, because we import about 70, 75, 80% of our crude oil needs. The moment crude oil prices start to rise, that impacts the macro picture of India, which has been pretty good, and therefore you see such a large bout of selling pressure that is happening in India because of tensions in the Middle East. Now let us also look at 2 stocks. While there is a strong sell-off happening across the board, you have ONGC down just about 30 paisa. Remember, early morning it was up at 298, now at 291. Rising crude oil prices are beneficial for ONGC, but they are worse for oil marketing companies such as HPCL and BPCL. And there is zero surprise here that amongst today's top losers are HPCL, second largest fall, actually it's the top loser. Hind Petro is 7% down, BPCL is 5.3% down. So you can all link the problems in the market today to the issue that is happening in the Middle East. Now, if Israel starts off raises the tempo of its response, then this sell-off in India just might accelerate. So this is the sum total of all that is happening, and you can make that distinction with the kind of heavy basket selling that has happened on India today. Reliance now 4,000 crores worth of sales, counter down 3.85% below 200 DMA. HDFC Bank now 3,400 crores worth of sales, and Tata Motors down about 3.8%, about 1,900 crores worth of sales. Today's FII net sales will exceed 10,000 crore rupees on a net value. We'll of course get that update late evening. 2:54, ladies and gentlemen, 30 plus 6, 36 minutes left for trade. Nilesh, anything that you may have caught moving around sharply on your charts? How about Ajanta Pharma, 3% higher, 33.54?
Sure, I'll add my input on Ajanta Pharma, but before that, just one point that I want to highlight. Brent crude we have already touched upon. It seems like it has bottomed out, and we can expect a move towards $78 to $80. Apart from that, another negative factor for Indian equity market is rupee depreciation. In last 2 weeks, rupee has depreciated sharply from 83.4 to almost 83.95 currently. So that is again a negative factor that is again adding a kind of a negative sentiment for the market. Now coming to pharma space as a whole, it's kind of a mixed bag. A couple of pharma are witnessing some negative structural breakdown, whereas Ajanta Pharma has a positive structure, and we can expect a kind of follow move to continue in this particular stock towards the levels of 3380 to 3400, and it is likely to inch towards the new record high of 3500 as well as a positional bet. One stock that is on my radar is from fertilizer space, that is Deepak Fertilizer. And if you just pull up its 2 year chart, exactly after 2 years, the stock has broke out from its rounding bottom kind of formation. That was a consolidation that we have seen in last 2 years. Now, post this breakout, we can expect a follow-up move towards 1200 to 1250. So that's the short to medium term target, and 1050 will be the stop loss for the long positions.
Okay, so that's the view that is also coming in on crude oil plus, of course, Ajanta Pharma. Nilesh, before the clock strikes 3:30 today, where do you see the Nifty? Do you think 25,000 is a possibility?
So from intraday point of view, in next half an hour, I think Nifty should hold on above 25,200, and we might see a closing, I would say a weekly expiry day. So a closing somewhere in the range of 25,200 to 25,300. That can be a 300-point trading range. That's the best case scenario, and worst case scenario could be 25,100 to 25,200. I don't see Nifty touching that 25,000 mark today, but might possible maybe tomorrow we might see those levels. But purely from intraday point of view, I think most of the unwinding has already been factored in, and we have already seen that unwinding. So for the day, I expect some consolidation from here for next 30 minutes. 25,200 to 25,300 could be the closing for the Nifty.
Okay. Before we let you go, sir, would there be a BTST or an STBT?
So one BTST that I've just pointed out, that's Deepak Fertilizers 2 year consolidation breakout. So in spite of such a carnage in the market, this particular stock managed to outperform, and it's up 2.5%. So we expect a follow move towards 1160 to 1180 on immediate basis, and one can keep a stop loss below 1110. So that's the kind of a BTST trade, and STBT would be on HAL. So this particular stock is constantly forming a low top and low bottom formation. A short buildup is happening today in today's trading session. So we can expect a follow move on the lower side towards 4,200 to 4,100. and one can keep a stop loss above 4380.
Okay, so this is what is most likely the two stocks that you have in mind as far as prices are concerned. Of course, Deepak Fertilizers a standout performer on the charts, a very strong show so far, and the breakout has been phenomenal, and it's all the more appreciative on a day when you have this 2.1 percentage point sell off on the Nifty alone. I mean, the kind of carnage that is going around with strong volume pressure, it remains to be seen. And here is Deepak Fertilizers. Last 2 days, very strong volumes, 22 lakh 94,000 shares today, and 30 lakh shares yesterday. So this is something that is doing phenomenally well in terms of price action. Any view that you would have on granules, Nilesh ji?
So for the fourth consecutive session, we have seen a strong rebound in this particular stock. So if I have to choose any one particular pharma stock at current level, that would be Granules. Kind of a reversal that we have seen. It's a good development in this particular stock. And interestingly, if you just pull up the derivative data, 48% OI addition I can see as of now. So that is a huge OI addition is happening today. Volume is also crossed almost 1 CR today. So it's a good stock for a BTST, or maybe from a short-term point of view, upside may extend towards 620 to 640, and one can keep a stop loss below 575.
Okay, so that is the view that can be seen on Granules India. Remember, the reason why I point out these shares is that all along the market you see this very, very strong, intense selling pressure. But here are stocks that are not only rising smartly, but they are rising with advancing volume, and that needs to be appreciated. Look at Amber Enterprises, 5.2% higher, 5100. This is the EMS play, electronic manufacturing sector, which is a limelight as far as prices are concerned. You have on the chemical space, agrochemical space, BASF India, 8100 rupees, 2.6% higher. You have Jindal Steel and Power, JSW Steel in the green, and of course, who can forget the volume that is coming into Dabur. Now, they had come up with their quarterly business update, and you see this massive sell-off. I can't remember a day when I saw Dabur fall 6%. That's a bit of a dampener, and the fall below 6%, the fall of 6%, and that to a gap down. Remember, yesterday's Tuesday's close was 619, and it opened at 580, and it's been there so far. This is below 200 DMA, so the chart itself is now in pain, and this is the price when you last saw was June 5th. So a lot of stocks, ladies and gentlemen, are breaking down their June 5th level, and that is a very serious signal that the market is sending. Dabur for you, Nilesh.
Extremely weak. Multiple reasons. First of all, opened on a gap down note. It's a breakaway gap. That too, stock slipped below 200-day moving average. Second, confirmation of a negative development with a huge volume participation today, and 28% OI addition. So clearly, a short buildup, huge short buildup is happening in this particular stock. So any pullback towards 600, 610, that should be used as a selling opportunity, and we might see the levels of 570 to 560 from a short-term point of view, and quite possible that stock may test the levels of 550 as well going forward.
Okay, That's the view that is coming in on Dabar. I think we have another guest, and it's Kranti Bathini, Director of Research at Wealth Mill Securities, who's joined us. Good afternoon to you, Kranti. Not the right day to start a conversation on Dalal Street, and especially not the right day as far as this selling pressure is concerned. How are you explaining to your clients this massive sell-off or profit booking, call it what you will like, is happening on Dalal Street? What do you think are the reasons?
Shail, good afternoon to you. Shail, I remember last time we had the interaction when there was a irrational exuberance on the market. Today, we are meeting on a day when there is a complete fear on the street. So we are we are having an interaction on the both of the extreme ends of euphoria and the panic. It is a classic case, Shail. Right now, we can see the stock markets. There is a great saying on Wall Street. Stock market, when they're going up, they take the stairs. When they're coming down, they takes the escalator. That's what we are seeing at this point of time. But having said that, Indian markets has been one of the outperforming market in the emerging space, emerging market universe, and one of the best performing market globally. So some kind of froth also build up in certain pockets of the market that we have been discussing from quite a few months onwards. So we can see some kind of due to this the global geopolitical issues that have been accentuating at this point of time. So Indian markets are expected to correct with reason or without a reason. But the strong liquidity flows have been supporting the markets to stay above the 26,000 levels. Right now, what we can sense at this point of time, there is a complete profit booking from all the spectrum of the market. In the morning, mid and small cap universe was holding, index was holding for quite a short period of time. But slowly the sell-off accentuated further. The carnage is very strong at this point of time, but the domestic facing economy stocks are concerned, the sectors are concerned. Investors need not have to worry because there is some kind of skittishness and amount of fear in the market because majority of the new investor that came into the market, they have not witnessed these kind of market cycles. They have been having a colorful days like markets. They have witnessed the one side of the coin. Right now, the geopolitical issues have been creating overweight on the market at this point of time. So investors can stand with their investments wherever there are excesses are there. If they are sitting on good amount of profits, they can take some capital from the table, but nothing to worry at this point of time. Whenever there are excesses are there, that excesses are going out of the market at this point of time. So it gives a better shape to the market now, Shail. And investors who are just waiting on sideline, waiting for a correction kind of thing, they can start chipping into the market with just 5-10% of their capital at this point of time. Nothing to worry. These are geopolitical issues are weighing on the market, not related to the domestic fundamentals are concerned. They are intact. We are entering into the earnings season. Earnings season is going to drive the market going ahead.
Right. Kranti, how much as a percentage, which is this SEBI crisis and this Middle East problem, is responsible for this 500 point or let us say a 700 point decline on the Nifty? How much would you attribute it to problems in the Middle East and how much to this SEBI circular aimed at curbing speculation?
Very interesting question, Sahil. But of course, the SEBI circular, the restrictions on the curbs of F&O market, derivative market also came on a timely thing. Still, it had an impact on the market. Market sentiment is concerned. Yeah, of course, if I have to bifurcate, it can be the geopolitical issues are weighing more on the market carnage than the SEBI implementation of these new norms with respect to curbing the F&O trading is concerned. I believe it do have, but more of that. Okay, the geopolitical issues are weighing on the market. SEBI restrictions have just they are adding fuel to the fire. But otherwise, the geopolitical issues are weighing a majority at this point of time than the SEBI restrictions. Of course, they do have, but predominantly the SEBI restrictions are also there. But predominantly the geopolitical issues are creating weightage on this market at this point of time.
Okay, ladies and gentlemen, let's just now look at how the markets have reacted over the last almost, let's say, 2 p.m. onwards. It's flattened out. The Nifty is in a sideways band. About 25,276 is the higher band, and 25,250, 25,240 is the lower band. So it's now in that zone of 20-30 points where lots of conversation must be happening internally. Do we touch the 50 EMA, which is at 25,050, or do we start the process of rebuilding the market? Remember, in a span of 4 sessions, 1,000 points have been shaved off on the Nifty. In a span of just 4 sessions, 2,700 points have been shaved off on the Bank Nifty. And similarly, mid caps. Let me just tell you the highest level that was there on the Nifty mid cap index of 100 shares. This is right there in front of me, and we have the high level of 60,925 points. That was on 24th of September, and successive waves of selling have now pushed the index below 59,100. So that would be about a 2,000 point correction on this one, and at 58,700 is the 50 EMA. This one is also below 21 EMA. Let's look at the small cap index as well. This is again something which showed valuations which were way off the mark. The small cap index, ladies and gentlemen, is below 50-day moving average. So the selling intensity is higher on small caps and mid caps if you look at the last 5-7 trading sessions. A record high of 19,615 on September 24th, and you have now 18,956. So a nice 700 point cut on this one as well. This is how, ladies and gentlemen, the cookie is so far. And let's look at Kranti in terms of any suggestions that he might have in terms of stock picking. Kranti, what looks good, or do we stay away? How about Reliance at below 200 DMA? Would you extend purchases, or would you sort of stay away?
Definitely, investors sitting on cash, okay, they can just chip in at this price range also, but no need of jump and buy. Okay, if they have 100 rupees capital, okay, they can go and buy for 25 rupees at this point of time. That's what the strategy. Just wait how the things are going to accentuate, the geopolitical issues, how they are going to move in the next couple of days. That is extremely crucial. It is just starting because the geopolitical issues have been there, Shail, from past 18 months. We have witnessed the beginning of the war between Ukraine and Russia, and also 8-9 months back we have witnessed in Israel and Gaza. Now the geopolitical issues are entering into a new orbit. Okay, so how it's going to pan out in the next couple of weeks, and how the impact of crude oil prices, because we are having a joyride, because crude oil prices have been very favorable to India, below $70 per barrel, which is cooling off our inflation. Our CAD has been coming down. Right now, how crude is going to, this is a joker in the pack, how it's going to behave in the next couple of weeks, that is extremely crucial. But investors, at this dip, one can chip in to buying any large cap names at this point of time, Shail.
Okay. How about a structured fund, maybe an ETF that you might suggest on the Nifty, which will make sense at current levels? Or would you want to sort of look at stocks alone?
Well, at this point of time, I'm more preferred to becoming a stock selector at this point of time, very stock specific rather than getting into an index fund still at this point of time. I still, for a medium to longer term perspective, I still prefer a stock specific approach than the getting into a index specific approach at this point of time.
Okay, fair point. Anything in mid caps and smalls that you would prefer now that the correction has started to deepen, or would you stay away?
Shail, at this point of time, the mid caps are concerned. It has to be very stock specific at this point of time. So I'm not in a hurry to getting today. If you ask me, if you keep the gun at a point blank range and say, Kranti, are you going to buy? I definitely say no. I'll just wait and watch approach for this point of time. How the things are going to pan out in the next couple of days, and also the earning season. Okay, well, the stocks earning season is crucial because in next few weeks we are getting into a full throttle of earning season. So how the earnings of these companies are going to determine. That's what we are going to see. But one thing to keep on our mind, Shell, there is a lot of humongous amount of liquidity that has been waiting in the sidelines to getting into Indian markets. So markets are going to witness sharp corrections, and also I can watch for a sharp recovery also on Indian markets. So at this point of time, a staggered approach is a better approach because certain things which are beyond our control and imagination, how the things are going to, these predicting geopolitical issues are a bigger task for a person in a equity market. That's for you and me. So staggered approach can be done. In mid caps, one need to see they need to have a very specified stock specific approach. The valuations and the future earnings of these companies is extremely crucial for chipping into the new mid cap names at this point of time.
Okay. The one thing, ladies and gentlemen, you don't need to do, and you should not even let that thought enter your brain, is stopping your sip. In fact, this is a time where probably one extra sip in one particular month would be helpful. Maybe you can just, you can buy mutual funds for as little as 500 rupees. So maybe one extra sip in the mutual funds that you already own would be a much better idea on how to navigate this market, rather than try to sort of hunt for new value in a beaten down stock which might slip further. And you would be buying a basket of good quality stocks available 4 or 5% lower compared with 4 or 5 days ago. So that is a far more sensible way to look at it. And at the same time, I'd just like to mark the breakdown that is happening on Larsen and Toubro. Now at 200-day DMA, falling for the 6th day in a row at 3470. Larsen and Toubro, ladies and gentlemen, is down 5%. So as I have said, these prices are very painful to look at. BPCL is the top loser on the Nifty, down 5%. You have Shriram Finance 4.5% lower, L&T 4.5% lower, Axis, Tata Motors. Tata Motors has had a breakdown, 925, and this is, let me just check the chart of Tata Motors because we've been tracking this one for a while. Okay, below 200-day DMA, and this is the lowest since 4th of June. Like I said, the market is trying to tell you something, ladies and gentlemen. Try and hear it. This is a corrective phase of a very sharp bull run that we've seen. I do a norm. Let me just try and plot a Fibonacci retracement and see what's going to be in terms of I'll put that chart on my Twitter account a little later, but okay, I'll put that out on my Twitter account. Let us see how it goes, but the last how should I say 4 days have been quite painful for the bulls. This correction is now deepening. The Nifty trying to close almost near its day's low. 25,250 is also a mild support that has been put on the options chart, so that is something that can be looked to, but a massive sell-off across the board. It's hard to hide anywhere here. What's the advance decline that I see? Okay, it's 432 advances versus 1985 declines. Okay, this is getting to be worse, but the good point is that you just have now 11 minutes left for trade today, and then we will look at the pain point again. Is this a good time to look at what US futures are doing? Yes, please allow me a moment's time to update you on what the futures of Dow Jones are doing. Okay, so the sell-off continues. US Dow futures are down 124 points. S&P 500 futures are down 1/3%. Nasdaq is down 0.5%, and US 2000, that's the Russell 2000 index, is down 0.78%. Well, that's how it is, ladies and gentlemen. The sell-off continues. Kranti, your views, closing comments.
Europe and Asian markets are trading mixed, but we can see the ferocity of the correction is high on Indian markets because we have been one of the best performing market. You have made a very valid point and a wonderful suggestion for the investor style, that is try to add one SIP during this month, these kind of dips. Yes, it's a wonderful suggestion for a common retail investors to have some kind of exposure on dips. That's a wonderful suggestion that you have given. In terms of the markets are concerned, yes, the carnage is further accentuating, but one as Warren Buffett rightly says, okay, buy when there is a blood on the street. We have not witnessed this kind of carnage in the recent past. One thing I remember is recently when the election day results are announced, there was a same kind of volatility we witnessed in the market, and we have witnessed the markets recovered swiftly after that down day. But these kind of days are something different because these are by and large more about the geopolitical issues at this point of time, how things are going to pan out, what kind of news we are going to get in the Middle East. So these are the factors are driving the market at this point of time. Still, on a broader term, broader term and a longer term perspective, Shahid, the Indian fundamentals are quite strong. Even though we can sense some kind of skittishness in the market, but the domestic consumption is intact despite of the looming worries of these geopolitical issues. So if anyone is sitting on cash, okay, one need to take some kind of a small exposure at this point of time for a longer term. Cannot be ruled out in these markets, Shell. But it is more stock specific. The quality is the template.
Yeah, you were saying something. Please continue.
Yeah, what I was telling is the quality should be the template at this point of time. majority of the retail investors, what they tend to do is that again try to get into to the penny stocks and the kind of experiments. But this time, the quality should be the templated in this kind of geopolitical issues are looming, and also when there is a carnage in the market, quality should be the template.
Okay, so what should you do? This is now a mixture of what Kranti is suggesting and what I have in mind. Look for quality. That's your first filter. In times of pain, ladies and gentlemen, it's the large caps that matter. These are the 50, 70 companies that define a country, that define an economy, and are at the top of their game in terms of management strength, in terms of great balance sheets, and in terms of phenomenal market shares, a great moat, as you will put it. This is the time to look at these quality mid cap, these quality large caps, blue chips, and large mid caps, large small caps, who define their sector. How would you buy 60 such companies at one go? Pick up any good equity diversified fund, pick up any good flexi cap fund, and just buy one extra SIP in this month. Would you buy it today or tomorrow? It is entirely up to you. We are not in the business of timing the market. We are in the business of taking advantage of a short-term knee-jerk reaction. The Nifty is down 1000 points from its peak. Bank Nifty is down almost 2800 points from its peak. Can they fall lower? Most certainly yes. But will they rise? Yes. Will you have a fresh record high beyond 26,250 on the Nifty? Definitely. So you need to get ready for that, and of course use common sense and intelligence at the same time to buy into this dip. At no point of time, ladies and gentlemen, should you stop your systematic investment plan in any of the mutual funds that you may have chosen. But should you stick your neck out? Most likely yes. What you see is froth being taken away from the table. What you see is chatter. What you see is unbridled enthusiasm that has been banished. And is there more to go? Maybe yes. But will markets right? Definitely. So just put in a simple SIP, buy in lots. You could take 4 SIPs this month and take advantage of this downtrend. Buy it on maybe with a gap of 2 days, something today, then 2 days later, and then 2 days later. That is how you sort of take advantage of this drop as well. 325, ladies and gentlemen. Before we bid goodbye to Mr. Bathini, one stock apart from Reliance that you would be looking at with very, how should I say, mouth-watering prices, and maybe buy piecemeal.
For L&T at this point of time, engineering major, quality, and they're arming into defense as well as the semiconductor space. So L&T looks very attractive to me at this point of time. Any further dip from this level in L&T, one can add slowly the engineering and capital goods space at this point of time, because this is one company in India which is again template for the quality.
Okay. And what else in terms of maybe a small cap or a mid cap, or would you stay?
It is by and large very stock specific, Shell. Okay, we are entering into the earnings season, and so earnings are going to drive the markets going ahead. They are the key, because in short term markets are voting machines, and long term they are the weighing machines. Now market is going to weigh on the earnings. So all these days what we witnessed is the fringiness. Now that fringiness probably gone out of the market right now. So right now from here onwards, the earnings are going to drive the markets at this point of time.
And earnings, ladies and gentlemen, is what we will be tracking Remember, come August 8th, October 8th and the next week. Tomorrow is just one more week left. We will be on 4th, and then on 8th of August, 8th of September, my apologies, 8th of October, you have the earnings season beginning in India. Remember, for the last 4 months, since June, the Nifty has been on an uptrend. Let me give you this data so that the loss that you see on indices today can be put into perspective. In June, the index Nifty rose 6.6%. In July, it rose 3.9%. In August, it rose 1.1%. And in September, it rose 2.3%. One mild drop in May, 0.3%. And then Jan, Feb, March, April. So in the 9 months that have lapsed, in 8 months, the Nifty is in positive territory. Just a mild dip of 0.3%. And on an year-to-date basis, before this sharp sell-off came, the Nifty was up 22%. It has shaved off about 3-4%. So nothing to be worried about at all. Let's start wrapping it up, ladies and gentlemen. 25,721 for you on the Nifty, 522 points lower. 1,000 point cut on the Nifty Bank, 51,885. These are the 4th day of sales that are happening on the market today, and some of the biggest sales have come in on Reliance Industries, HDFC Bank, Tata Motors, Axis and ICICI. They all point to basket selling by foreign institutional investors, and today's FI net sales will be something to be looked forward to. All 19 indices that we track have fallen anywhere between 2% to 4.6%, and of course the advanced decline is favor of bears. 1900 shares in the red compared with just 430 in the green. This is a day which was the weekly expiry of the bank of the Nifty as well. It has now ended at September 18 lows, and we see a lot of selling pressure, profit booking, and of course short sales happening because of tensions in the Middle East and because of changes that SEBI recommended in the futures and options market. With that, ladies and gentlemen, remain glued to Business News Television. A lot of good news is coming on the other side of this break, and I'll be meeting you tomorrow when we will again pick up this thread from the Nifty at 25,260 and the Bank Nifty at 51,860. Thank you so much for your time.
It's that time of the year again, new GoPros. But this is a very different time in the world of tech. iPhones have gotten so much better. In fact, that's actually being shot on a new iPhone 16 Pro Max. And more importantly, Ray-Ban Metas are in, and there's so much more from the world of wearables. But this is the OG. In this crowded, cluttered market, how can GoPro innovate? That's what we're going to find out with this unboxing.